trading can be a very humbling experience if you know the technical stuff and you don't know anything about mindset, psychology, and risk management. In this video, we are going to talk about the harsh reality of psychology and risk management in forex trading. If you are new to the channel, subscribe. We are on a mission to reach 1,000 subscribers, so join the team. Let's jump into the video. So don't focus on the pen. I don't need any questions about the pen. Let's focus on the content of today, which is number 1, accepting risk. There is a very big difference between accepting risk and defining risk. So this was my mindset that when I used to go to the screen. I say, for example, I'm willing to lose $100. So I define I'm willing to lose $100. That would be the stop, whatever. But in reality, I am not willing to lose that money, because once price hits my stop loss, I feel a negative. I feel pain. I feel the pain of loss. So this goes to show how defining risk is not the same as accepting risk, because if you understand that every single trade is random. Now, credits to trading in the zone, because it breaks down the psychology of a trader very, very well, and it has shifted my mindset. So when you accept risk 100%, fully you accept, I am willing to lose $100. This means that when the edge plays out, so when the process follows its, you understand, when you risk that amount of money, then you are willing to accept the possibility that you might lose that money. And if you lose it, then you don't get all emotional over it. Yeah, sure, you can feel that disappointment, but professional traders have a different way of looking at risk. They are willing to lose that money, and they won't get affected by the outcome, because in reality, every single trade is different. And this is explained very, very well in trading in the zone, where if you really want to replicate the trade that, say for example, yesterday you had a winning trade. If today you get the same, the process follows itself, and you see the same situation, it would take all the traders that took the trade yesterday to take the trades they did yesterday today, in order for the same setup to play out as yesterday. But keeping in mind that, okay, today is a different day, and the odds of this the odds of that setup playing out is different from yesterday, meaning the same setup that you are looking at is unique, has an independent probability of playing out as a winner or a loser. So the first thing is accepting risk. Accept that you might lose that money, and if you lose it, since you have already accepted that fact, it is not an issue. It is not going to affect your next trade or the next trade, because you understand that each single trade is unique, is different. Number two is forex is a game of probabilities. Now, this is a mindset shift that is a very hard concept to actually grasp, but I'll try my best to explain it. Now, on an individual trade level, so each single trade has a unique probability of playing out as a winner or a loser. So it's just like flipping a coin. Every single time you flip a coin, you don't know the outcome. So it's a game of probabilities. So at the game of probabilities, at the single trade level, the reality is that when you don't know the outcome, because there are so many unknown variables in the market. You don't know the exact number of players in the game. You don't know the exact level they are going to enter. You don't know. There are so many. It's chaotic. But the game of probability is that you have an edge on in the market because you have a system. It's not like you come to the screen and flip a coin and then based on that you buy or sell. You have a system, meaning you have some the probability of actually the market going in your favor is more towards you. But that is on a macro level, where when you aggregate, then when you add up more trades, you find that your edge plays out over a period of time. So accepting that each single trade is individually different, but on a bigger time scale, then those trades actually pay off when you follow your edge. And this is the same way with casinos. So think about gambling. There is a 50-50 chance of winning or losing, but if you stick to a certain strategy, then that means you have an edge over that game, and over many games, or it's a numbers game, and the more numbers you have, the more profits you gain. That is just the single reality that I have accepted now. You cannot judge yourself based off one single trade. You cannot be a bad trader based off, or a good trader based off one trade only. It takes time. It takes time because it's a numbers game. Number three is that there is no right or wrong. So think about this situation. If you come to the screen, say you have a very tight trading window, and you come to the screen outside of your trading window, you can look at price action, you can follow the process that you usually follow, and you can spot an opportunity, but you won't feel anything. So you are not right or you are not wrong, and that is the reality. The market is not right or wrong. It is just printing out data. So it is how you perceive the price action, and how you project your own beliefs, and it is just internal, the way you perceive the market. So if you perceive the market as negative, you feel negative. If you perceive the market as positive, you feel positive. But the downside to this is that you will always be in the motion, because the market will always be moving up and down. But what professional traders have done is they are present. They know the reality is that the market is just printing out data. It's not positive or negative. So dissociating yourself from trying to project your own beliefs. So let me give you an example. If you have a winning streak, if you have maybe 5-6 consecutive wins, you find that you are very confident when you come to the screen. Or when you have losing trades, you feel less confident. But in reality, every single trade is individually unique. So the last trade should not affect today's trade or tomorrow's trade, because it is different. But because you have associated a positive emotion or a negative emotion, that affects your trading. So coming to the screen, it is important to remind yourself that this trade is different from the other trade. So following the process every single day, as if yesterday did not happen, or we won't be having any other trade tomorrow. Following the process to the core, regardless of how yesterday was, how you are feeling today, as long as the market presents that opportunity, you take that opportunity just like you would in a winning trade or in a losing trade. Because the reality is that you can't predict the market. You are not right. All you are doing is just playing a game of probability with an edge. So you're not right, you're not wrong. Just let the market play out however it will play, because in the long run you are going to actually see your edge play out. Your edge will not play out in the one trade or two trades. So don't try to be right. Don't try to Don't try to compete with the market, because it is going to fuck you over. Lastly is that it's just a game of numbers. It's a numbers game. It's a numbers game. So if you have an edge in the market, and think about this situation, you have a strategy that might be 50% winners, 50% losers, but with a risk reward ratio of 1:2, 1:3, 1:5, you find that you will still be in profit even though some of the trades are losers. And guys, accepting that you will lose money in the markets is basically the single most important shift in mindset that will actually transform your trading. That is the reality. And if you read all these books, if you listen to all these coaches, this is what they tell you. In reality, accepting that you are going to lose money in the market, but in the process you're going to make money. So just think of losing money in the market as the price you'll have to pay in order to make money. That is just the single most important thing that I have accepted as a trader. So I recommend you read Trading in the Zone, because it is a very good book. It only focuses on mindset and psychology, and if you really have mastered the technical analysis part, then the rest of your trading will just depend on your psychology. That is just the reality. So hopefully this was a valuable video. If you got value from today's video, subscribe. I offer a free mentorship program. Click the link in the description for more information, and I will see you in the next video. Peace out.